Hey everyone, welcome back to another portfolio update video. We are currently sitting at $5,451.25 in the portfolio, up from last week and even closer to break even. This week I made a ton of plays and made a nice little profit, moving closer to our goal of going green, and it's looking good. So I'm going to go over all the positions, all the plays right now. So to start off, here's what we are currently holding. You can see we have no shares and only 3 put contracts, so we have much fewer positions than in the last video. Last video we had 100 shares of ChargePoint and probably about 8 or 9 options contracts currently running, but some of those have expired worthless and I've closed out the majority of them on top of that. So just a quick overview, you can see that all 3 of these put contracts that we have open right now are very profitable, and I'm just going to let those ride out. You can also see we have $4,000 in buying power for options right now, which I'm going to put straight to work on the next down day or after CPI this week. And just a quick update towards our progress, you can see now we're only down by 48 bucks, which is equivalent to 0.89%. So now we're down in this portfolio less than 1%. We're that close to breaking even, to breaking green. You can see the last time we were this close was on the 3rd of March, and that we were $2 higher than we are right now, and that was obviously almost 2 months ago now. Before that, all the way back in early January, we were down about 72 bucks at the peak, and way before all of that, at our closest peak to breaking even previously, was all the way back in December and in November of last year when we were down 15 bucks and down 10 bucks. And now, once more, months later, we are finally given this opportunity once again. So we're going to play this super safe, really think out the next moves. That way we can secure the bag and go green coming soon. You can see also I currently have $10 in short options value that's going to get paid out to me, and that's on these remaining couple contracts here. And you can see some of these have a farther out expiration, so this might be a while till some of this premium, reaches the account. But it's a nice little addition to what we need to collect. So on top of that, we only need to collect $39 more in options premium to finally go green, which I think is a very achievable goal. Further, for this week, you can see we collected a total of $49 in options premium this week, and on top of that, we had a gain this week of $17.01. And you can see that broken down here a little bit more. So far for the month of May, we've pulled in $31 in options premium for a total gain of $17.01. Here you can see specifically the progress for this week. So this week we made about 50 bucks in options premium and an actual gain of 17 bucks, as I mentioned earlier. Here are all the contracts that were for this week's expiry. You can see the purple here means that we got assigned on a contract, and in this case it's a call assignment. So that's why our 100 shares of ChargePoint got called away from us and are no longer in our account. And for me, this was actually the best possible scenario. I really wanted to get rid of those ChargePoint shares, and I also, you'll see in a minute, I don't want to get assigned on SoFi this week, and we kind of got into a bit of a bad situation with SoFi, but we managed to climb back out of it, and I reduced my risk by closing a couple SoFi contracts early. That way I wouldn't have to worry about assignment come next week. And the main reason for that is because, as you might know, this week is the CPI report, PPI report. These normally are pretty big market movers, so if CPI even barely goes against us, it could spell disaster for the progress that we've been making. And so I really don't want to take any kind of risk like that, which is why the current contracts we are holding are basically zero delta, very long dated, very low premium, and basically incredibly safe contracts. You can see this one has a 3% chance, an 8% chance. This one's supposedly 0% chance for all these to even remotely get us assigned in the first place. So that's why I kept these contracts open, because I really just want to collect this extra premium, and I know they're not going to get hit. But yeah, if we go over all the plays for this week, you can see there's quite a lot. To start off, we had our options contracts from last week expire last Friday. I'm not sure why they're on here for the first. I think it just pushes them over to the next market day, because technically they expire at midnight Friday, so it kind of pushes it to the next Monday. So we had 2 options contracts expire there. On top of that, I bought to close a SoFi put after their earnings report when the IV crush happened for $1. So in a good profit on that. I also bought to close a Palantir put just out of safety and to avoid risk, because I was a little bit worried. I didn't really want to get assigned at the 750, especially since Palantir has earnings tomorrow, or I guess technically Monday morning. I didn't want to hold through that, and the price of Palantir was actually getting pretty close. So we're going to hop into trading view here for just a moment. You can see there's a lot of stuff going on my trading view nowadays. But just to look at Palantir here, we're on the daily candlestick chart. So I believe that was around Monday of this week. and you can see the price of Palantir was 777, but had we held that contract, we would have been assigned at 750. And like I said, earnings are the following Monday, and I really didn't want to take any of that risk, so I just offloaded the contract. Even at a loss, I was okay with that. I just didn't want to take on the risk. And further past that, I ended up selling a ChargePoint 750 put for the May 12th expiry. I also sold a SoFi $5 put also for the May 12th expiry. You can see we collected $12 in premium here, and I ended up having to close this one out early for a loss to avoid any risk of assignment for next week, once again because of that CPI report, and because SoFi earnings just dumped the stock so much. Once again, I'm going to pull up the chart here for you to look at. You can see, so this was, I sold these contracts on this day, and you can see the price just kept dropping, another 10% that followed that. So my contracts, I had two SoFi $5 put contracts open, and I ended up closing those out on Friday, both of those. But you can see for a while we actually got pretty deep in the money on those contracts by about $40 per, so we were actually down pretty big this week at one point, down about $80 on just those contracts alone because of this dip after earnings. I didn't expect the earnings to keep dropping the stock, which is why I was holding those contracts, but luckily Friday gave us an opportunity to get out with a little bit less of a loss than we would have otherwise had. So luckily I was able to get out of both of those contracts to avoid the risk. Further past that, I ended up selling the May 12th 650 put on Palantir, which once again I ended up closing out on Friday just to avoid that risk. Even though it was at a loss, I was okay with that. I didn't want to take on the risk for earnings. Past that, we have a Labu $4 put I sold for $10 of credit for the 26th of May expiry, and you can see that on Labu had a crazy run up this week. And I know I didn't cover it before, but at one point I actually had bought 100 shares at about $4.62. So around this level, and you can see it's run up all the way to $6.66. Those shares ended up getting called away at the $5 strike about a week ago because it just ran straight through my strike, and there was no way I could roll it out for a decent credit, and I didn't want to take the risk. So unfortunately, yeah, we missed out on quite a few Labu gains, but that Labu put we opened on, it was either Monday or Tuesday. I'm still holding now, is pretty deep in profit because of this crazy run up, so that's always good. Past that, I sold another SoFi put, this one at the $4 strike, which is an all-time low for SoFi. It's never been hit before, so I was comfortable with that for a $6 premium for the May 26th expiry. Here you can see where I offloaded a lot of my risk. I was able to buy back a Labu put that we had opened for last Friday's expiration at 0.01. Same with a ChargePoint put at 0.01, so we made full profit on these two contracts. I also bought on Friday a SoFi $5 contract, that one that we opened earlier in the week, for $6, which was actually a profit. Or actually, this wasn't the one we opened earlier in the week, this is one we opened last week, but I ended up buying it back to avoid that risk of us getting assigned, and I was able to close that for profit. This one is the one that I opened earlier in the week. Obviously we took a significant loss on this contract, but we were able to get out of the money on this, and at one point, like I said, this was pretty deep in the money. Didn't want to take on that risk, so I dumped the contract there. Same with that Palantir contract we picked up earlier in the week. Didn't want to hold through earnings and CPI, so I just dumped it. We ended up getting assigned on ChargePoint, and we were having to sell our 100 shares at $8.50, which is below my initial cost basis, but you can see I've sold so many options on ChargePoint that once this put option expires, we will basically be overall positive on ChargePoint. And it's okay because you can see on companies like Labu, I mean, we've almost made $100 on Labu, SoFi 24, Palantir 10. So this, lesson learned on ChargePoint is nothing significant. We're going to end with a profit anyways, so I'm okay with selling at $8.50 because ChargePoint, it didn't really follow the market. It kept dumping day after day and really wasn't following what the S&P was doing, so I didn't really enjoy holding it. So I'm glad to get rid of that, even if it's at a loss, because of all these premiums we got. I mean, the call that it got called away on was $40 worth of premium, so that's huge. So I'm okay with that. But yeah, with that being said, that's all of the plays, positions, opens, closings that I've done this week. Once again, it was a very profitable week, and we're just making small strides towards our ultimate goal of going green. I also just want to talk about a possible rework of my option selling strategy. So I've been selling a lot of weekly options contracts, but I'm starting to move a little bit more towards monthly options. As you could see in my portfolio, you saw that I had The majority of these two were for the May 26th expiry, which is a few weeks out. So maybe not necessarily monthlies, but just more than a week out. I'm kind of looking to sell more contracts at different expiration dates other than the closest week, just because you can get paid a significant percentage of return on your collateral just for selling a put contract at a price you know the stock won't hit, or if it does, that it's an all-time low for that stock. So just to give you an example, you can see that Labu is at 666 right now. The price of Labu has never reached the $4 price before. It has never reached $4 at all, and of course I was happy with owning it here. It rode up all the way up to here. Why wouldn't I be happy with owning it at a new all-time low? So what I was looking at is for selling just a month out, you can see at that 4 strike, we can still get paid over 2% of a return on our collateral for just selling a monthly. And as we know, my goal in this portfolio is to try and pull in about 2% each month in passive income. You can see we hit that last month, plus a little bit more. But you can see that these monthlies are very lucrative. So even though the price of Labu is so far away from the strike price, we can still get paid over 2% on our collateral for just selling a put at a price we would love to own the stock at. So that's why these monthlies are kind of becoming more attractive to me. Of course, weeklies are still good because you get that weekly premium that comes in. You're going to realize that gain by the end of the week, but monthlies are also looking pretty tempting, so I might do a mixture of both. Also, something to note is that TD Ameritrade has some pretty heavy fees, so every time you open an options contract or close it, you pay 65 cents. So on these smaller stocks that I've been opening a ton of contracts on, I've been paying a ton of fees. So if you have to open and close an options contract for 4 weeks in a row, then you're paying 65 cents times 8, which is a lot of money, at least over $4 in just commission fees. Whereas if I sell a single contract just for the month, then I know that I'm only paying $1.30, and these contracts have larger premiums, so that commission fee is a much smaller percentage of the overall premium that I'd be losing for opening and closing that contract, which is why monthlies are also pretty attractive. And I'm not really sure if I mentioned it, but my 18th birthday is coming up on the 31st of May, and I plan on moving all of these funds to my own brokerage account on Robinhood as soon as possible after my birthday, because that's when I'll actually be able to open up my own brokerage account because of that age of 18. So as soon as that happens, I plan on withdrawing all these funds and moving them to Robinhood, where there are 0 commission fees, much better user interface, a built-in feature to roll options. It's just Robinhood has a lot more features and is a lot more catered towards option selling, in my opinion. I've used it before. It was great for option selling. I'd definitely say it's better than TD Ameritrade for option selling in a smaller account, especially when you're selling a large volume of contracts week in, week out, because you end up paying a lot of money in commission fees. So that is my plan going forward. So for now, I'm kind of trying to get all of this money by May 26th. That way I can close this account and open my own Robinhood account, which is why I'm trying to go green by this date. And once we do hit that date, I'll still make the portfolio updates. It'll just be on a different platform pretty much. But yeah, I thought I'd say that. And let's do another example. Let's actually try SoFi. And you can see that SoFi has never dropped below this 426. So the optimal price to sell a put contract would be at the $4 strike, because it's never even reached that price before. And it's had run-ups, all the way up to 825, all the way up to 853. So owning SoFi, a quality stock for the long term at a price of $4 a share, would be amazing. So let's see how much that would pay us. And you can see that $4 strike is paying us about $6, which is 1.5% ROI on the collateral for selling at the best possible price. So you can see that monthlies are very lucrative. If I were to look out just a single week till next week, so no more of the weekly mentality, you could see I could get paid about 0.75%, but to sell at a higher price, which I wouldn't really be looking to own shares at $4.50. So yeah, that's why I'm kind of leaning towards weeklies. You can see if we were to do a weekly put at this price, we couldn't get anything for it. So yeah, that's why I'm planning on potentially doing a mixture of weeklies and monthlies going forward. But yeah, that is the portfolio update for this week. You can see making more progress towards the goal. We're going to continue to do that, and I'll keep updating you guys week in, week out. So I'll see you next week.